you must use a stop. You cannot act fast enough to get out of a trade. It can go against you faster than you can even start to put your hand on the mouse to close the trade.
The interest in zero DTE options trading has exploded during the last few years. It's fast, it can be very profitable, but you can also lose a lot of money if you're not careful. So, are you curious to get started but don't really know where to begin? Well, we got you covered because here is the queen of zero DTE, Tammy Chambless. Hi, Tam. Hi, Tammy.
Hi. Thank you.
Well, you have really been trading zero DTE for a long time. What's the attraction for you?
I love it because it's immediate feedback, it's fast, it's interesting. You can make a lot of money. I found that with shorter term options, you have more occurrences, and therefore you can make more. You may make less money per trade, but you can do many more trades. That's the big attraction.
And you share your results every day.
Yes, I do, on the Facebook group and on the Discord group. Quantum Options Facebook group and Quantum Options Discord. And
Isn't
yeah,
that a bit scary? I mean, not all days are good days.
I post it regardless. So I figure it's better just to be open and honest. I'd rather not post just when I win because people may think I win all the time, and I don't. I try to post the good, bad, and the ugly. Whatever happens, I'm posting it.
So, this interview today, we are targeting people who maybe have been trading options but never tried zero DTE. Let's get straight into it. What is zero DTE options trading?
The DTE part stands for days to expiration. And if you're familiar with options, you've probably heard that term. Often people are trading 30 DTE, 60 DTE, or 90 DTE. That's generally what people are taught. Zero DTE is a little different in that you have to watch the market all the time while your trades are on. There are some ways around that, but generally you've got to be very alert and able to take action if you need to take action.
So, let's go into some of the characteristics of a trade zero DTE that expires the same day.
Decay on longer term options happens very slowly. On zero DTE options, decay happens fairly quickly, but it's fairly steady throughout the day. As long as the stock isn't moving very much, the decay is steady throughout the day. And in the last hour, you get a big drop, the theta drop. The other Greeks act a little different. It can be more reactive to vega and delta changes. And so volatility is important to be aware what volatility environment you're in. And gamma at the end of the day can make or break you. If the market starts moving at the end of the day, you can go from a winner to a loser very quickly. So it acts a little bit different than longer term options.
Yeah, you really have those days, don't you, where you think everything is going just fine, and then it takes five
Yeah,
seconds, and the whole situation is different.
you can get a big jump on the close, market on close, a bunch of orders hit, and the market takes off, and or a big down move, and either one of those can take you out, depending on what strategies you're working.
But if you are a risk averse trader, like I am myself, actually,
Mm-hmm.
this may sound a bit scary. Can you control?
I'm a risk averse person too. Anytime there's risk, your emotions get involved. And I've developed ways to be more mechanical in my trading. That helps me control those emotions. In controlling risk, you can use a stop, you can close early if you choose. You can, there's some various techniques like that you can do. The nice thing about using a stop is you always know what percent of your account you're risking. Like if you're using a stop that's two times the initial credit, that's the most you can lose, assuming your stops just don't get blown through. Occasionally, there can be some slippage, some bigger losses than you anticipated, but usually with a stop, they're somewhat controlled, and but that it just all factors into the reward you get for zero DTE options. You're rewarded for that risk on most days, and then some days you take a hit, and that's okay. It's just part of it.
We will dig a bit more into the risk management, but I think before we should go through the different types of strategies that you can do on zero DT. Like with all other option trading, there is, literally hundreds of strategies people are doing, but let's try to categorize them a bit.
Yeah.
And I guess the simplest one is just pure directional buying a call or buying a put, isn't
You can pretty much do. I was trying to think of strategies that you might not be able to do on zero DTE that you can do on longer DTE. And I couldn't think of one offhand other than maybe a calendar or something where you have different expirations. But you could even do a calendar with the short leg expiring on zero DTE. And that's it expires the day you put it on, 0 days to expiration. It's just on that day while the market's open. Most of the time people are selling options. So directional strategies like selling spreads is a good idea. Put credit spreads, call credit spreads. A lot of people do those. And whichever way the market is not moving, just put on the other side. And those do pretty well. My personal favorite is iron condors because I don't know what's going to happen when the market opens. It can go up, it can go down. I'm terrible at guessing direction on market.
it?
And so I like iron condors because you can trade within, as long as the stock stays within a certain range,
Mm-hmm.
you do fine. And iron flies are another one. I don't particularly trade those, but I know a lot of people do trade iron flies on zero DTE and do pretty well with those. And again, there's ways to control your risk on those. Always using a stop, basically. So that's that. Those are some of the strategies that people do.
I also love the iron condors; those are my
Hmm.
favorites. But for a beginner, where would you recommend to start?
Yeah, for beginners, I would start with the credit spreads, just understanding those
Mm,
and keep it simple, one sided, and learn how zero DTE works. I have seen a lot of beginners try a lot of different strategies. They'll try one a couple of times, and if they take a loss, they'll say, well, that one doesn't work. I'll try something
mm,
else and go try a different strategy. I will say all strategies can work. You have to understand the strategy and when to use it, how to manage it. It's finding what you like the best. Some people like flies, some people like iron condors like you and I. Some people like credit spreads. A lot of people do a lot of different things and have been successful. Just because you take a loss or a couple of losses doesn't mean that strategy doesn't work. Just keep at it and focus on that strategy and learn everything you can. Find others on YouTube and on the internet who trade that strategy. Learn what you can from them. How are they trading it? What are their typical returns and what can you expect from that strategy? So keep at it and paper trade first always, and you can be successful at zero DTE. And the nice thing is you get quick feedback. You can try again tomorrow. Maybe today didn't work out and you try something else tomorrow. Try another spread further out of the money or closer to the money. There's lots of things you can do.
Are any underlyings better than others?
I think so, especially for zero DTE, because I think that the European style options that are cash settled are better for zero DTE because you don't have to worry about what happens to those options the 15 minutes after the market closes. Most options expire not right when the market closes, but 15 minutes after, like options on stocks and ETFs like SPY. Earnings announcements and things come out after the market closes. It can be risky for those trades. So that's why I like to trade cash settled options.
When you say cash settle options or European style, we are talking about products like SPX, which is following the Standard and Poor 500 index, or the mini version XSP, for instance, or
Yeah.
similar versions on the other indexes.
Yes, index funds. My favorite is SPX. It's a large product, but That's good because if you're trading 0 DTE on SPY, there's not much premium on the day of expiration. But SPX, XSP is a good one. RUT is another one. NDX is important too. Just be aware of liquidity
Mm.
when you're trading
I
the
was going to
underlying.
say,
Yeah, because and you can tell liquidity by this bid ask spread on the option chain. SPX is usually about 10 cents, 15 cents, something like that. NDX may be up to $1 or more, just means it's less liquid. And what that means is you'll have trouble getting out,
mm.
that you'll pay more to get out than you want to pay and increase your loss. So pay attention to that liquidity.
Yeah, it's the worst if you cannot get out of a trade. I did a couple of times try both on NDX and Root, and I had problems getting out of the trade.
It is tough sometimes. I haven't traded them. I've just looked at them and heard stories. But SPX is very liquid. It's one of the most heavily traded options in the market, that and SPX. So those are both good for liquidity.
Mm,
I'm sorry, SPY. SPY has the problem of it doesn't expire when the market closes. It closes a few minutes or 15 minutes after the market. So
mm,
you'd want to take your risk off before, so you'd have to close it
mm.
before the market closes.
So
Um,
let's get into the risk management part here. You
sure.
are in strong favor of using stop losses, I understand.
Absolutely. Absolutely. I used to trade 7 DTE options. I would sell 7 DTE options on RUT every Friday. No stop. Just take what happens. And then if it did go down or I lost some money, I'd get out of it. But what I found was that overnight risk, which you don't have in 0 DTE, that's another great advantage. The overnight risk introduce, and you can't get out if the market starts going down overnight. You can't do anything about it until the market opens the next day.
Mm,
That's the real danger in trading longer term options. And I know there's a lot of people that don't recommend using stops on longer day options, but on 0 DTE options, you must use a stop. You cannot act fast enough to get out of a trade. It can go against you faster than you can even start to put your hand on the mouse to close the trade. Always use a stop. Another risk management measure is position sizing.
mm,
Especially when you're starting, keep your size very small. There is a lot you're going to learn. It's just hard to tell you everything that can happen in a trade. You're going to learn a lot when you start trading these.
mm,
I would start paper trading. Paper trading is not a good proxy for what really is going to happen in the trade, but you can learn the mechanics of putting the
mm,
trade on, putting the stop on, watching what happens, and how to manage the trade. What I recommend on position sizing is don't risk more than 2% of your account. If you have a small account, like less than $10,000, you can probably bump that up to 5%. But
mm.
if you can, keep it to 2%. And I still trade by that. No matter how big my account gets, I'm only risking really 1 or 2% at this point in my trades.
Is
And
that per trade or per day?
that is for the whole day.
Mm,
How much I could lose in my account on the whole day. So if every trade that day went against me, and I figure out how much I could lose in a trade, and that's a good thing to focus on. Focus on how much you can lose rather than how much you can
mm,
make, especially when you're starting out. Try to keep control of the size of your losses. That's the best thing you can learn as a new trader, is managing the size of your losers. Another thing to be aware of on managing 0 DTE that's completely different than longer term options is, is all the options at the end of the day are either going to be in the money or out of the money.
mm,
The out of the money options are going to greatly decay throughout the day. Let's say you put a trade on. I usually do spreads. I don't trade undefined risk. You've got a credit spread or debit spread or an iron condor where you've got the credit spread on both sides. Put credit spread or call credit spread. Toward the end of the day, those out of the money long options will decay down to zero,
mm,
usually within the last hour of the day. They will be worthless. If you have a stop on a spread
mm,
and you have a leg in there that is worthless, that trade will never fill. No matter how high the price gets on your stop,
mm,
it will never fill. One thing you have to be aware of with zero DTE options is either put a stop on the short leg,
mm,
or if you put stops on spreads, toward the end of the day, when that long option is worth 5 cents or less, convert that stop to a stop on the short leg only. And that way you won't ever get caught with a trade
mm.
that's not going to fill and it's going against you. So that's a very important thing, and I always try to make sure that people understand that because it's one of the biggest risks. And if nobody tells you, you just don't know until you experience it, and that can happen.
But even if you are very careful in setting your
Mhm.
stop losses on all trades,
Mhm.
some days it will not work. Some days something will go wrong. What can go wrong with the stop
Yeah.
losses?
With stop losses, there can be a big intra-minute move. Let's say Trump makes an announcement and the price jumps or drops 10, 15 points, and your stop fills at a higher price than you wanted. That's called slippage. You can experience high slippage on fast moving days. And if you have I don't recommend placing limit orders anymore, stop limit orders. I used to do that because of some changes CBOE, Chicago Board of Options Exchange, has made. We don't need to use limit orders anymore. I just use market orders.
Mm,
And that will get you out regardless. You may not like the price, but you're out. On a stop limit order, if you use those, don't recommend it, but if you do use it, what can happen is the price blows through your limit order without filling and it
mm,
keeps going against you. Sometimes the price will revert and come back in, and then it's within your limit and your stop will fill. But
mm,
sometimes you could take a $10 loss, multiply that times 100, and that could be your loss on one contract. And with a limit order, you've got unlimited risk there, even though you've got a limit order. You'd have to close it manually. And that's happened to all of us. We've all kind of learned that lesson. It's just something to be aware of. So if you do use limit orders, always keep an eye on them and see what the market's doing. How close are you to being in the money? If there's any big moves in the market, check your stops and see that everything either got stopped out or is far away from the market. If it's gone against you and you're showing a big loss, just exit manually.
What
It
is the
happens.
worst loss you have experienced in this type of slippage where it's
Oh, I have taken some big losses. One of the losses, this has been a few years ago. It was during the GameStop meme thing. I wasn't trading GameStop, but other things were going on in the market. And it was over $100,000 that I lost on one day. And
ouch?
because of that, I think I was still using limit orders. And I only switched to market orders in 2024 after CBOE made some changes. That was painful. I made it back, but not that day. It took a while to make that money back,
Mm.
but it was painful. So try not to make the same mistakes I made. I'll tell you what I did and don't make those mistakes. There are plenty of other mistakes everybody can make. Just don't do a mistake where you can lose a lot of money.
Which zero DTE strategies do you trade yourself?
I exclusively trade MEIC, multiple entry iron condor, and it's similar to your strategy. And I think you've had some people talk about that on your videos. I enter iron condors multiple times a day, and I use a stop. a 1x net stop. So the most I can lose is the same as the most I can make. That's how I like to trade. I like to keep my losses very small. And that trade has a low win rate, like 53, 54%. But the number of occurrences, it's like flipping a weighted coin. You have a lot of positive trades. And the by using a 1x stop, I can only lose, well, generally only lose on one side. Some days the market goes way down, stops me out of all my puts, and then it goes way up and stops me out of all my calls. Those are my worst days where I stop out on every trade. And that's where I limit the amount at risk to 2%. So that's the most I can lose. And I've got to be okay with that because it happened a couple of weeks ago where every trade stopped out. So I exclusively trade MEIC, and there's one other strategy related, multiple entry trend following, which is it's a directional strategy selling credit spreads away from the direction the market is moving. So I'll do that in one account. I don't trade that in all my accounts.
But would MEIC be a good strategy to start for a beginner, you think?
Ooh, I would not think so. If you're new to options, start smaller, where you've just got one trade on.
Mm,
MEIC becomes a lot to manage,
mm,
and it takes a while to get used to it. Once you have become successful just trading one trade at a time and understand those mechanics, and you're comfortable with that, you could start trying multiple entry iron condors and start small, just do 2 entries or 3 entries
mm.
and build up. It can be overwhelming if you're new to options. So I don't recommend starting with that, but it's a great strategy, very profitable. Not every day is profitable, but that's never the case with any option strategy. So
How do you measure the results of zero DTE trading? What is your way of measuring your results?
I keep a manual trade log. I write down my trades and the price I got for the short option, the price I got for the long option. I enter that in a spreadsheet, and I enter some statistics about that, like what the width of the spread was, if I stopped out, what stop multiple I got out at, what was the slippage. So you can basically measure whatever you want to measure, whatever's important to you. I like keeping a lot of my own records, and then I can double check those records against, the broker, what they're reporting. Sometimes I'm working with Tradier right now. I can't even see what my trade filled at once it's done. It's kind of out of the picture. I've got to look at the trade confirmation the next day to see what the actual prices were. Whereas if I keep my own records, I see what it stopped out at and can keep records on that. I keep an Excel spreadsheet. I recommend doing that because it gives you good feedback. I can total up my profits. I can see how many trades stopped out versus how many trades won that day. I can see what slippage is. I can see what average credit I'm getting for trades. I would recommend for beginners to start farther out of the money, trading, selling like Delta 5 or 10 options and buying a further out of the money option. With MEIC, I'm generally selling around Delta 20 to 30. It depends on the time of the day. But if you start out with those far out of the money options, that's a good way to learn. They don't react as quickly. And that's a good trade to start with.
And I think I couldn't agree more than when you say it's so important to keep some sort of a trade log.
Mm-hmm.
It's so easy, especially if you have more trades than one in a day, to think that you know how your results are, but you
Yeah.
need to be able to analyze it
Yeah.
and analyze the data and see how it develops over time. Also, a big numbers game, isn't it?
Exactly, exactly. Especially with multiple trades, you're taking $150 per trade, and it adds up over time. You don't know how you're doing if you don't keep records. You can't just you could look at your account balance, but if you're trading other strategies, then it's all mixed in together, and you wouldn't know how one strategy is doing compared to another. So I do encourage people to keep good records.
But what What have been your overall result, let's say per year, in trading zero DTE
In
during the last few years?
the last few years, generally trading zero DTE, I've made at least 20% return in the market most years. The last couple of years, I've been trading the MEIC and I'm averaging closer to 30% return. And that's return on account, not return on buying power. If I counted it as return on buying power, I would basically say that on MEIC, I'm making about 100% on the buying power I'm risking every day. In the past, it was probably closer to 50% return on buying power on just entering one iron condor in the morning. So it can be pretty profitable. It takes a lot of work. So, zero DTE isn't for everybody. It does require that you watch the market all day. I mentioned there are ways around that. There is automated trading that's starting to become available. But even with that, sometimes there are times when you need to watch it because they may not have features to get you out at the end of the day. If the market starts moving toward your stop, it hasn't hit your stop, but it's in the money. And that's when gamma can expand. And so even with automated trading, you have to jump in and take some manual action sometimes. Some other things that I'll recommend for new traders is know when your options expire. If you're trading Apple, when does and you're trading zero DTE. So you're trading on the day that Apple is expiring. Does it actually expire at the market close or does it expire like Saturday morning sometime and settle Saturday morning or 15 minutes after the market? That's important information to know because you still have risk on before that trade is closed and settled. And then another thing people can get into issues with, depending on where you live, what country you're in, and what the trading rules are. In the US, we have what we call pattern day trading rules. If you have less than 25,000 in your account, you are not allowed to make more than 3 day trades. Zero DTE trades are considered day trades. So you're not allowed to make more than 3 day trades in a 5 business day period. So if you have a small account, less than 25,000, you're going to need to pay attention to how many trades you have on, what happens if everything stops out. If you close a trade, that counts as a day trade. If a trade expires worthless, that doesn't count. So you could have some good trades that expire worthless and you haven't used any toward your maximum of 3 day trades in a 5 day period. I would recommend for beginners just toward the end of the day, get out at the last 15 minutes of the day. There's a lot that can go against you. And if you aren't familiar with what can happen, avoid it for a while until you want to learn more about it. And then, because you'll take most of your profits if you close 15 minutes before the close. So,
I have a personal rule to close my shorts at 5 cents, which I'm
that,
usually out at that time, at least with most of my trades.
yeah. That's a good rule. Yeah. I leave mine on to expiration, but I'm always watching very closely. Like today, we came within about $1 of one of my short strikes, and I had my finger on the button. If it was going down there, I was going to get out.
What
It's
are the biggest mistakes that you see beginners do?
I think beginners often, and I was this way too. I will learn a little bit about a strategy and go, okay, I think I got it, and I'll go trade. I might put a trade on where I'm trading 1 or 2 contracts, and I'll think again, oh, I got this. I know how to do this. So then I'd bump up my trade size to 5 or 10 and get whacked. And so the biggest mistake I see people making are trading too big. There is so much that can happen that goes against you. I still get hit by things that I didn't see coming. Like it just new things happen all the time. And it just seems like every year I'll get whacked and learn some new lesson, but it's less frequently that happens. But the other thing I see beginners do is think that they can get out manually and not use a stop. Believe me, when you've had it happen where the market drops 20 points and you're well in the hole in the red, you just cannot act fast enough to get out manually. So I always recommend using stops. Another thing to watch out for, especially with zero DTE, are fees. When you're making a little bit on each trade, fees can take a big hit into that profit. So try to find the least expensive broker you can that is a reasonable option broker, has a full feature of the ability to place stops and things like that and monitor your trades. Look for the lowest fees you can, and because it's especially important with zero DTE, they can eat into your profits. I've managed to keep my fees. My total fees were about 17% of my total revenue last year. So that gives you an idea of probably about the best you can do. A lot of people can't do that, and it's around 20-25 is what I hear most of the time, that your total fees are about 25% of your total profits. So that gives you an idea of what to aim for.
Tell me, where would be a good place to learn more about zero DTE if you are a beginner?
I think there's a lot of good free resources. There's a lot of YouTube videos. Some are good, some aren't so good, but you can learn something from all of them. YouTube is a good place to go, and you can just search for zero DTE or 0 days to expiration. There's a lot of traders that post their videos. Facebook and Discord, there's several groups that are involved in those. I mentioned the quantum options group and the Tasty Trade options group are good on Facebook. And if you'll send me an email, Tam Chambless, ChamBless at gmail.com, I'll send you a link to get you in the quantum options Discord group. You're welcome to join. There's a lot of information in there. When you find somebody who is trading, you're interested in how they're trading, just send them a direct message and ask them about it. Find out as much information as you can from them without being too much of a pest. Here's my cat. Let's see.
Ah,
There,
nice.
that cat's ear. Here we go. Charlie's got to make an
All right.
appearance. He always thinks I'm talking to him when I do these calls. So he comes around thinking I'm talking. He always thinks I'm talking to him when I do these calls. So he comes around thinking I'm talking to him. But there you go.
Well, I
So
can also recommend, the quantum options and the tasty trade options Facebook groups that you were mentioning. They are
yeah.
both very good groups, and most members are really helpful to the others, giving advice and discussing strategies and
Yeah.
experiences.
It's a great place to learn. There's a lot of members there that have traded a lot of different strategies, a lot of different ways too. Not everybody trades zero DTE the same way. So, find somebody you see doing something that seems successful and ask them and find out the details of what they're doing. I always recommend backtesting, which is another video that we did.
Mhm.
Check out the backtesting video. That's a good way to, one advantage of zero DTE options is they're very much based on the probabilities of the options and less susceptible to earnings announcements or news. They're still susceptible to news, but little less, especially if you're trading SPX. One announcement in one stock isn't going to kill the whole market. So a little less susceptible to news.
And we do have a couple of other interviews about the
Yes,
different zero DT strategies. So I guess a couple of them will pop up on the screen here that you can watch if you are curious.
great.
Tammy, thank you very much for sharing your knowledge and for always being willing to help other traders.
You're very welcome. I love helping other traders. I was there one time too. I always try to make it easier for the next guy than it was for me. I kind of had to learn through the school of hard knocks, but I can tell you about all the mistakes I've made. Hopefully, you won't make those. You'll probably make some others, but you'll avoid the ones I made. Thank you, John. I appreciate your invite to doing this.